Alright, folks, welcome to this week's Forex commentary and market review. Here's the dollar index on the weekly time frame, and last week we talked about how two-sided dollar index was, and we could make a case for a bearish DXY. If we just simply look at 360 market structure. Okay, if we're looking at how price has been trading, it's easy to just look at the dollar index and say bearish. But if we look at the significance of the liquidity run here, that after prices took out sell side liquidity here, it begins to question how DXY is trading around these levels here. So that's why I said DXY is bullish, and we covered all of those details we wanted to see in price action. So I recall two weeks prior, I said if I wanted to see a bullish dollar index, we needed to see the market stay above this volume imbalance. So while we have traded through a bit, we failed to stay above this volume balance, and that still adds a little bit of question for this week's price action anyways. But we're beginning to see clearly how that DXY is sort of bullish, and there may be interest for buy side liquidity here. So, and this is the level we've been talking about for a while now. I was talking about this is the head, and this is the left shoulder, and this is the right shoulder, right? And that's why here, courtesy of the run on liquidity at sell side here, and this heavy rejection and a reaccumulation to discount. Now, mind you, we have a bullish order block here. This last down candle prior to the run through this high here, and you can see the bodies of the candle close through this level. So we have a bullish order block here on the weekly time frame, and I'm thinking that markets are likely to engage buy side liquidity here. So on the daily time frame, what do we see on DXY? Well, while the weekly time frame is bullish on DXY, if you look closely here, the daily time frame, we are still below this volume imbalance, and that's why it makes a whole lot of sense if we can see the market stay above this consecutive downward candle. I mean, if we talk about last week's price action and the follow through, I mean, we had a swell time at the Discord talking about the XY, because each day we were really only able to frame a bullish DXY. Now this was the start of last week's trading. There was the opening range gap, and you can see that there was a change in the state in delivery here. Okay, there was a change in the state in delivery here, which obviously validates bias. And in hindsight, if you were only bullish on dollar index, I mean, it's if you buy the order block here, which is the change in the state in delivery, you can see how it validates the weekly bias, and the market respects it here, and the market just post gains till the end of the week. And after buy side liquidity was taken here, the markets went into consolidation. So that's basically how the market behaves. After the market engages objective, the market goes into consolidation most of the time, especially if we've had prior expansion from the early portion of the week, and the markets now engages objective maybe at a Thursday or Friday. You can't expect much after prices takes out objective. They're likely to return into the range and in form of a consolidation. So I was trying to say something on the daily time frame, like currently this is the only level we have here on the daily chart. We have this inversion gap. Okay, you can see this fair value gap here. Previously it's now an inversion, bullish inversion gap, and we have this down candle, this order block. So I'm thinking we could see the markets return into this inversion gap, okay, tomorrow. Because if you look closely at Friday's trade was in consolidation, right? And it looks clearly that we could see Monday return into this bullish auto block. So if the market trades into this auto block and we begin to see sponsorship, okay, then we can qualify Tuesday as a likely time to trade, because this is the market coming off of a weekly auto block. Okay, if you look closely, we have a weekly auto block, and it's the change in the state in delivery here on the weekly time frame, because you can see the bodies of the candle staying above this last downwards candle after the markets reaccumulated into a discount. So I'm thinking the markets are going to return, take out buy side here, because this is an obvious draw on liquidity here on dollar index. So seem pretty straightforward, but obviously if you listen clearly, you'd see that there are criteria because before we can engage in price action. We want to see how Monday trades. Obviously, we want to see if Monday trading validates our buys in form of a bullish candle closure. Preferably, we want to see if the markets can engage this auto block and stay above this volume balance, because this still maintains as a key resistance level. I mean, I could be wrong on buys and market takes out buy side here, and because we're not closing above this consecutive downwards candle, they could utilize this as a level to frame a total soup to engage sell side here. I mean, that's very, very possible considering the kind of conditions we're in currently. And I genuinely like how last week panned out, because you know I made a statement on the last commentary. Like I said, someone will be watching me and telling me that, okay, is this not a bearish auto block and all of that. You can now see clearly that auto blocks make no sense if they are not contextualized. If you cannot put the market into proper perspective, all of the things you're seeing, yeah, heavily and critically subjective. None of these things make sense if you cannot put them into context. So if you haven't taken a loss trading on weekly auto block, you would never understand the kind of things I'm saying. Okay, how can I talk about a bullish dollar last week when I was obviously seeing a bearish auto block? I mean, you can now see it. So context is it's where everything is, and that's why especially the fact that we are in consolidation. Okay, we are in consolidation, and that's one of the things that helped me lean bullish on DXY, because I recognize the fact that we're in consolidation, and so long we are not out of this range, I'll still think TXY is in consolidation, right? So Euro USD, we have this high here and this one, and we have a swing high from last week. The market rejected here, redistributed into premium. We have a swing high, so we have a bearish order block now, and the draw should be previous weekly low, and I think the markets may find strength to engage sell side liquidity resting below here. So on the daily time frame, contrast to dollar index, we have a change in the state in delivery. That was on Thursday, but since market has met objective, Friday was in consolidation. Okay, so we have a level here on euro, but not the same on dollar index. So we are going to find our way in blending validation on dollar index with their already pre-existing confirmation on the daily time frame on euro USD, because we already have a bearish market structure shift. Okay, there's this high, there's a low, there's a lower high, and there's a lower low. So this is a bearish market structure shift and a change in the state in delivery. So if you look at dollar index here, you'd see while we have a bullish market structure shift, it's not the change in the state in delivery, because the change in the state in delivery is this kind of closing through this level, and that validates bias. It says the daily time frame now aligns with the weekly bias, and our weekly bias is bullish, but it's not completely aligns with the daily time frame. In terms of the market structure, we can see a bullish market structure forming on dollar index, but there is still potential and possibility that we could be wrong, and the market is, just being funny this year, and just see money sell off, and just incredible things happening. I mean, anything could happen on the chart, right? But based off of what we've been calling out for 2 weeks now, I think the markets will engage sell side here. I think there's a change in the state in delivery. I see a change in the state in delivery. I want to see how Monday trades. I want to see if Monday is willing to engage, buy side liquidity here. Because if you look closely, we have relatively equal highs here. So I want to see if Monday can trade through here and close below this consecutive upwards candles. So if you can see a run on liquidity here and Monday's candle rejects and stays below this level, it will be very easy to qualify Tuesday as high probability, and it's going to be a good trade actually, selling Euro USD and holding for this range. I mean, it's going to be a beautiful trade if that if we see that pan out. So on pound, pound, we have something here. We have this inversion here, this inversion gap, and we have the volume imbalance on pound, and we could see the markets open up and make a retest of this inversion fair value gap, and after the market engages the inversion fair value gap, we could then see market begin to sell off. And there isn't so much detail else here on pound. I mean, we have market take a buy side liquidity here. This is the run above buy side liquidity here, and this is sell side liquidity. I mean, internal liquidity here, considering the dollar index is bullish, and we're likely to see the markets engage, sell side here. So within the inversion fair value gap, we have this consecutive upwards candle, which is the bearish order block, the change in state and delivery. So if we can see Monday's candle trade into this level here, and takes out buy side bit from Thursday's high and Friday's high, and we can see a bearish Monday, okay, a bearish Monday's close. It will be very easy to qualify Tuesday's high probability, right? And then we can see the market take a sell side, and I think the markets may engage sell side here. I'm not sell side liquidity anyways, but we have low resistance liquidity run, we have this low that's mitigated here, low resistance liquidity run, and the market's trading into this level, the bodies of the candle, the rejection block, mitigating this level because this level itself is high res. So we have sell side liquidity around this level, so we could see a very beautiful movement in price action. So yeah, so I'm going to talk about gold this week, and last week I talked about gold on my Discord, and silver, talking about how we could see the markets take out sell side liquidity here. I mean, if you can check my Twitter account, I kind of like dropped the video recording of the commentary I had on the Discord, how I wanted to see gold trade and silver trade and all of that, and it was beautiful because just exactly how we wanted to see this market's trade. It's how the markets eventually traded. So I would counsel that you check out this video if you haven't seen it, and it's very beautiful to listen to those kinds of stuff. So I think the monthly time frame now, silver went into this fair value gap here, so we can see if you measure from this low to this high, okay, trade into like the consequent encroachment, not an entry drop, okay, almost would have qualified for an entry drop, but markets went to the midpoint of this inefficiency, and we began to see sponsorship, especially from last week's trade. If you want to just understand how we qualified it, I mean, you can just refer back to the video. So obviously we want to see how markets open because we're bullish on silver. This is validation of monthly buys, and we want to see them take out this high here, and possibly stay above this level. So our goal this week is to capture the move that takes us through this level, and hopefully silver can stay above the level, so then we can begin looking for more longs that takes us into buy side and stuff like that. But the idea this week is to see the market run, take out buy side liquidity here, buy side liquidity, and see if silver can stay above this volume imbalance. So on the daily time frame, we have, this down close candle. That's the candle that traded into this, you know, level here. Okay, I mean this is not an auto block yet. Okay, this one wasn't an auto block yet, and but we have a down close candle, and markets can make reference to this level for a retracement sort of, and we could get a continuation in silver from here and into buy side liquidity basically. So that's what I'm thinking, because everything is pretty straightforward now, and we're simply looking for levels that silver can key off of, and we can take buy positions off of those levels basically. Same thing with gold. I mean, gold, beautiful price action. We have this last down close candle. This is, you can call it an auto block, but this isn't an auto block, all right, because there's something wrong about this brokerage. But you see clear with FX CM. Okay, you can see this consecutive down close candle. That's a change in the stating delivery. That's the auto block. But you can also reference this level as I don't know, just I can't remember what level we used to call it. Is it reclaim auto block? Is it reclaim block? I don't know. But my focus is on this inversion gap, okay? And we have near term buy side liquidity here. I want to see how the market opens up, because at the close of gold's trading, you can see how the markets were expansive, okay, trying to engage into the draw on liquidity here. So I want to see how the markets open straight here and see if we can return back. Okay, this is the reference level, this old inversion fair value gap. So see if we can make a retest of it and a continuation to run into this week. Okay, we have this long week here, and primarily on the 4-hour time frame, we're just simply trying to capture the return into fair value. Okay, so you can see this level here. I want to see how gold trades into this level, and yeah. So I hope you found this one insightful. You can leave a like, comment, share this video and stuff, and I'll talk to you again. Be safe.